Hello and welcome back to Make Money Online. In this video, we'll look at the reasons why you should consider buying NIO stock. Watch this video to the end for cool tips that will help you earn off one of the best stocks currently on the market. NIO is one of the fastest growing automakers in the industry. It's been an outstanding 2020 for NIO, despite the increasingly crowded field of electric car stocks. It challenged Tesla in China as its electric car sales soared. NIO stock belongs to the auto manufacturers industry group. The growth of this group of automakers is not without the influence of the buck of the group, that is Tesla's rising stock. Auto manufacturing currently ranks number 2 out of 197 industry groups as investors warm up to electric cars. Within this group, NIO is highly rated just behind Tesla. Several new electric car stocks emerged in 2020 in Tesla's wake. They include stocks from Nikola, Workhorse Group, Hyliion, XPeng Motors, and Li Auto. These companies have existed behind the scenes but have gone public this year and are listed on the New York Stock Exchange. Big automakers such as General Motors, Volkswagen, Ford Motor, and Fiat Chrysler have seen the bright prospect of electric vehicles and are keying into it for the nearest future. Many of those, notably VW and GM, have big plans for EV production and sales in China. NIO's local rivals are Chinese-based XPeng and Li Autos. Since their establishment, they've risen in stock alongside NIO as all China EV sales have increased in recent months. Shares of NIO are near record highs, but it hasn't been easy. In the beginning, NIO stock went public at $6 in its first IPO in September 2018, then hit a low of $1.19 in late 2019 on sales and cash woes. Through most of 2020, share values increased as the Chinese EV market fell, then recovered. NIO more than doubled electric SUV deliveries for the first 11 months of this year. On November 17th, NIO beat third-quarter views and rose high. NIO stock is extended from a late August breakout past $15.55 as Wall Street cheered the sales momentum as well as improving losses, margins, and liquidity. Plans for expansion outside China lifted shares too. Since peaking at $57.2 on November 24th, NIO stock has dipped and hasn't risen to those levels since then, trying to find support at the 21-day exponential moving average. The sad news is that NIO and Chinese electric car stocks broadly have fallen a bit in December, as the US considers requiring Chinese companies listed on US exchanges to undergo annual audits or face delisting. It's not known how long this will go on, but NIO has to stay rooted in the New York Stock Exchange listing if it ever plans to take its products into the international market. Due to its unconfirmed pattern, an accurate buy point is not specific yet. The support line has risen considerably in 2020, and it shows no sign of abating yet. NIO earnings and fundamental analysis. NIO is still not turning in any real profit. It's a young and fast-growing company. NIO trails both Tesla and China EV peer Li Auto in terms of its EPS rating, but this did not affect its position in the EV industry. On November 17th, it exceeded the estimates of the third quarter. NIO lost 12 cents a share as revenue more than doubled to $666.6 million. Vehicle margins expanded to 14.5% from negative 6.8% a year ago and 9.7% in quarter 2. Available cash more than doubled from quarter 2 to $3.3 billion in quarter 3. While earnings remain far off, losses are narrowing. Analysts expect NIO to more than halve losses to 69 cents a share in all of 2020, then reduce losses further to 45 cents a share in 2021. Revenue is seen jumping 111% in full year 2020 and growing a further 94% in 2021. NIO as a strong EV leader. NIO sales slumped at the start of 2020 due to the coronavirus outbreak, which originated in the Chinese city of Wuhan. This caused a slight aggravation in the international market against Chinese products. As the year progressed into the second quarter, sales quickly improved as NIO deliveries increased up to 191% year over year. By the third quarter, it had surpassed 154%. The last few months of the year have not been different, with sales being double what it was at the start of the year. NIO has taken measures to improve production capacity as more orders come in and sales are projected to be improved. NIO was not the only beneficiary, as XPeng are also heads over heels involved in a fierce EV battle to win over the Chinese local EV market with Tesla. Wall Street analysts have predicted a more bullish trend in NIO. The firm promoted its predictions on its earnings and pricing, quoting previous sales records with strong sales momentum. Earlier in August, the firm saw a major improvement in stock, earnings, and cash flow. Also in October, NIO stock recorded the highest number of sales, which has earned them a certain proportion of the market. This declaration was also followed by the expected debut of a new affordable electric sedan scheduled to pop out in 2021 and 2022. NIO currently sells the ES8 and ES6 electric SUVs and the new EC6 electric crossover. This chart shows the price trend of NIO stock covering a period between April 2020 and December 18th. It documents the rising trend of NIO stock from $1 in 2019 to its several peaks, dips, and all-time highs across the months of 2020. It fully captures its struggles through the coronavirus-imposed restrictions and how it started its climb from May 22nd to its high on November 20th, and its current price around $46.32. Seeing is believing. It's a stark comeback for the electric car maker. NIO, the pride of China's EV industry, was strapped for cash and teetering on bankruptcy in 2019. But after seeing sales crumble and then dealing with coronavirus factory shutdowns, NIO rebounded in a very big way. NIO stock and China electric car outlook. NIO has improved considerably and consistently encouraged its loyal investors by making forecasts that depict its potential. This kept its investors happy, particularly with the glaring evidence of the reforms recorded. It overcame its production problems and developed technology that helped make its products affordable. This proved a major catalyst that attracted institutional investors to its portfolio, and the announcement of NIO securing larger deals with investors has done nothing but lift its stock value. Its sales report for the fourth quarter of 2020 shows an amazing increase in the number of sales of NIO's electric cars, up to 16,500 to 17,000 vehicles. This was a major upgrade that stood at 101% to 107% from 2019, though it showed a bit of a decline from the amount sold earlier in the year. The sales growth recorded in the third quarter was about 154%, and the second quarter was higher at 191%. NIO CEO William Li projected that NIO would reach an annual production capacity of 150,000 units by the end of 2021. In the long run, the company wants to double this output to 300,000 units per year. For us, that's a huge thing that would truly impact its market value if they can truly keep up with the market demand that is coming for them. Some analysts are optimistic about those targets. It is believed that the company can realize this as projected by maximizing the existing industry they have instead of building a new plant, as is rampant among industries in China. This should reduce the capital expenses of the company and ultimately its sales. The electric vehicle market of China has generally attracted the interest of analysts who see a future for the stocks of all EV companies in the country, including NIO. The total shares of the electric vehicle are expected to be multiplied exceedingly up to 20% by 2025. They've noted the prospect of much more affordable electric cars streaming out of the Chinese market by 2023 due to the development of cheaper yet quality batteries. EVs are expected to sell as much as traditional vehicles do in the years to come. NIO looks beyond China. Founded in 2014, NIO emerged on the China auto scene with little experience in the mass manufacturing of electric vehicles. But the EV startup has shown the promise of a brighter and more joyful future, as is reflected in its name, which means the blue sky is coming. In June 2018, NIO began deliveries of the ES8, a premium electric SUV, and its first volume vehicle. A year later, it produced a much smaller ES6. While September of 2020 saw the sales of the EC6 model, which was portrayed as a potential rival to the upcoming Tesla Model Y. NIO plans to enter other global markets, starting with Europe in the second half of 2021. Meanwhile, Tesla planned to begin importing its vehicles at cheaper rates into the European markets in October. A major difference between Tesla and NIO is that NIO does not manufacture its vehicles. It partnered with China's Jianghuai Automobile Group to manufacture the ES8, ES6, and EC6 utility vehicles. In its last annual report, filed in May, NIO warned that partnering with third parties on auto manufacturing is risky, given operations outside of its control. This was a major move at transparency that was well received by its group of investors. Additionally, NIO warned at the length of the coronavirus epidemic, noting it has both a service center and vehicle delivery center in Wuhan, where the pandemic was reported to have started. This did nothing to deter it from the greatness it was meant to achieve this year. From a fundamental perspective, NIO stock has improved after debt and liquidity fears crushed its shares in 2019. NEO is still operating losses while also fulfilling its promise of projected growth. As it increases in capacity, its production should stop being a benchmark for reflecting the company's growth as its profits begin to grow. The outlook for NEO car sales and overall electric car sales in China seems robust, while an expansion in Europe is being closely watched. The improvement of its finances has been applauded by analysts, especially after it launched its subscription battery business model. It might not be a great idea for short-term investors to tap into NEO stock right now. Investors should consider waiting for the EV stock to stabilize and start earning profit. This position would favor long-term investors. We hope you enjoyed this video. Don't forget to give it a thumbs up, subscribe, and click on the notification bell so you can get updates whenever we post a new video. Are you considering buying into NEO stock for the long term? Let us know in the comments below. See you next time.